Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China QINFA interim report. China QINFA Group Limited offers a diverse range of businesses and services, including coal mining, purchase, sale, filtering, storage, and blending goods transportation and logistics charter hire activities sale of machines and machine materials machine repairing shipping transportation business. The skyrocketing stock price of China QINFA. A tale of strategic developments and favorable market conditions, China QINFA Group's stock price has surged by over 170% in the past year, primarily driven by a series of strategic developments and favorable market conditions. The company's focus on its Indonesian coal assets has been a major driver of this increase. In December 2023, China QINFA commenced operations at its Sumber Daya Energi (SDE) underground coal mine in Indonesia, which boasts a planned raw coal production capacity of up to 10 million tons per annum. The company's aggressive expansion and successful operations in Indonesia have been complemented by the development of new coal washing plants and increased mine capacity. In May 2025, QINFA Group unveiled its QINFA SDE No. 1 coal washing plant, designed with a 3 million tons annual processing capacity to support the SDE mine. Additionally, China QINFA has secured coal supply agreements, including one with Zhejiang Energy Asia Pacific for 70,000 metric tons of Indonesian steam coal. Market sentiment has also played a role, with favorable coal market outlook and institutional optimism contributing to the company's stock price surge. The expected profit for 2024 and increased revenue in continuing operations have further boosted investor confidence. While a profit warning was issued in August 2025, the market appears to be focused on the long-term growth potential and strategic advancements in China QINFA's Indonesian operations. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by an increase in trading volume, particularly in Indonesia coal sales, plus 2,490 tons, and China coal sales, plus 1,490 tons. The acquisition of PT Widianusa Mandiri, WM, and PT Trisula Sumber Energi, TSC, also contributed to revenue growth. Additionally, the company's associate Tongmei QINFA Zhuhai Holding Co., Limited saw an increase in revenue. On the other hand, revenue decline is primarily attributed to a loss of control over Perpetual and its subsidiaries, resulting in a 58.6% decline in revenue. The net income of the company experienced a significant decline, shifting from a gross profit of RMB 237,156 to a net loss of RMB 189,227. This downturn was primarily attributed to the loss-making coal business. Furthermore, the gross profit margin for continuing operations decreased from 28.2% to 21.8%, while the discontinued operations saw their gross loss/profit margin drop from 20.2% to -52%. The decline in these margins can be linked to factors such as declining reserves, high development costs, and litigation risks within the coal business. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided summary, the company has achieved positive operating cash flow in 2024, with a net cash generated from operating activities of 698,780 RMB 0. This is further confirmed by the statement on page 42 that the operating cash flow status is indeed positive. The company's debt level has undergone significant changes. Total borrowings decreased by 92.6% from RMB 665,160,000 to RMB 49 million. Additionally, borrowings decreased by RMB 27,656,000 from RMB 29,123,000 to RMB 467,000. The total guarantees provided by related parties for the group's borrowings also decreased from RMB 6,198,580,000 to RMB 511,500,000. However, interest expenses have shown mixed results. While interest paid decreased by 80.5% from RMB 110,611 to RMB 21,684, total interest expense on financial liabilities increased from RMB 42,301 to RMB 52,512. The decrease in guarantees provided by related parties may lead to a further decrease in interest expenses. The company's financial performance varied across different regions and segments. The coal business in China and Indonesia stood out as performing well. Additionally, the China QINFA Group Limited showed notable performance, although specific data was not provided. On the other hand, there were no explicit mentions of poorly performing regions or segments. However, a decline in overall performance is suggested by the decrease in total reportable segments assets and increase in liabilities. The company's management emphasizes a growth-oriented approach, prioritizing expansion through strategic investments and acquisitions to drive business development. The company has a history of paying dividends. Notable instances include a specific distribution related to perpetual subordinated convertible securities and actual dividend payments made in the 6 months ending June 2025. This indicates that the company prioritizes shareholder returns through dividend distributions. That concludes the financial summary for China QINFA. Feel free to comment below, and I will be happy to answer them when possible.